Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
And with that, we'll go to the charts. Let's see. And if you would, if you have any questions, answers, comments, please don't hesitate to put them in the question answer box. That would be the best place for us, so we can go through those and keep an eye on that. And please participate. I said there's a lot to learn with trading, and there's a lot that we know. There's a lot we don't know what we don't know. So don't hesitate to ask the questions if things seem a little bit unclear to you, because we're trying to make this a good educational experience for everybody concerned. And with that, we'll go to the charts. And we will take a look and see what we have going here. I did see that earlier this morning, actually not all that long ago, there was a couple of trades. There was a British Swiss trade, which I looked at that, and that wasn't quite ready to go. It was actually going in the wrong direction. And the US CAD trade, I like that one a little bit better. I did take this one. And the US CAD, basically, we had three down green. Now, if we scale in a little bit higher, as scale out as far as you can see there's actually 4 red zones, 3 red zones. But I'm also looking at the fact with some of the economic news is what's going on. Oil is pretty much a Canadian product. You'll also see the oil and CAD going up and down together. And so being just zooming in a little bit, I felt pretty comfortable taking this trade to the long side. We had an up arrow. It looks like we have a little bit of momentum going on with that. So I did enter this. Stop is below this nice big zone right here. And we had a nice little came down. Didn't quite make this low. We have a little bit higher of a low. Here's a high, here's a low, higher low, and we have some up arrows, and see if we can get that 20 pips out of this one. 20 pips is still a little bit shy of where the red zone is, so there's some room to the upside, and we'll just see what happens with it. So I did take that trade. And that's
USD CAD, you said, eh?
USD CAD, yes. On the 15-minute chart, they said we did just with a normal zoom in. There was a stronger, lot of upward movement to this. So I did take this one. Any questions about that? And I said, if anybody has any questions, comments, please don't hesitate to ask.
Yes, and all of you, just for the sake of our sanity, any and all questions, please put them in the Q&A box so that we don't lose them in the chat. Sometimes the chat gets really overloaded with messages, and we want to make sure that we address the questions accordingly and in such a timely fashion as we can.
Let's go and we'll take a look. We'll just sort of go through some of these as we're maneuvering around this. The British Swiss, if we go and take a look at the British Swiss pair. Let's see if I can make sure I can. Here's the British Swiss. You can see that we had a down arrow. And just by looking at right off this, you can see we have 1, 2, 3, 4, 5, 6, 7 green zones. We have 1 red zone. And that's zooming out as far as we can, or zooming out as far as we can. So we want to take this to the upside, not to the downside. We have a down arrow. That immediately eliminated this trade for me.
Absolutely. There's no question in my mind here. Also, just a quick side note, guys. Arrow version 3 was released over the weekend. You need to reload all of your charts. You need to drag and drop that. If you're not getting alerts or something, it could be because you never changed the version of Arrow to version 3. And it's a very good idea to ensure that you do your Windows updates over the weekend so that your VPS works optimally.
Yeah, we had some people last night I was working with that their computer was working really slow, and as we checked in a little bit deeper, we found out that they never updated their VPS. Now,
Surprise.
keep in mind that the VPS is like a computer all of its own. It has Windows 10 loaded on it. It has, and you need to update that just like you have to update the Windows 10 on your computer itself periodically. And so a lot of these updates, if you look back, there's probably last update was like October of last year. And so you need to make sure the updates are done, reboot the VPS, and then reload everything. And I like going through it over the weekend. I like going through and just refreshing everything and make sure everything's up and running, ready for the next week's trading activities.
Yeah, the last thing you want to do is get ready to trade and then your system's all screwed up because we didn't take the time to ensure that everything's set up, right? There's a little bit of preparation to do, and it's critical to get that done over the weekend.
Yeah, and it really doesn't take that long to do it. And
It doesn't.
Matt was saying about reloading the VPS. We'll just actually, before we get into that, let's just take a look at the Forex Factory to see what kind of folders we have coming on this morning, or
That's a wise decision for sure.
but at least this week. So let me change my screen here. I'm going to share the Forex Factories over here.
Yeah, generally we don't put a lot of weight into fundamental analysis. The only thing we try to do is not trade around red folder news events that are significant in nature that can send the market into an aggressive spike in one direction or another.
So if we're looking at, here's Monday's news. Let's see if we can get more here. So you can see today's Monday, January 25th, and we can come down and we see not much going on today. I don't see any red folder news on Monday nor on Tuesday, but Wednesday, when you come down on Wednesday, you'll see a couple for the Aussie pairs. You'll see a couple of red folders. Thursday, you'll see some U.S. FOMC statements on Tuesday or Thursday rather. And so that's in the morning, at 12 o'clock to 12:30 in the morning. And let's see, then here at 6:30 in the evening on Thursday, you'll see some more. So basically, Thursday is a day to be watching out for. Friday, not too much going on Friday that we see. So the big days the big red folder days are going to be Thursday, Wednesday, starting around 5:30 in the morning. That's going to be hitting around the London Asian session crossover right in there. And that's pretty much what you have to be aware of for this week. And let's go back to the charts.
And if you are brand new to Arrow, I just need to give a little heads up, guys. It is a very, very, very simplified system. Many ways to trade it, but you first need to have an understanding of the basic foundation of Arrow.
This is a U.S. This is the S&P index.
Yeah.
We're not really trading that. We can take a look at it, but we're not really going. I'm not going to probably trade it. There's still a lot of volatility with the indexes right now, with the stock markets making new highs, and I'm just sort of staying away from the indexes right now myself. A lot of volatility.
Especially if you're newer to this, guys. Don't go into indices and crypto and gold. Don't trade those things. If you're newer and you've never traded the Forex before, which we need to address it for everyone, stick with the main 10 currency pairs with Forex and demo trade the snot out of it. Like just demo until you get about 70 to 80% accuracy, where you can win 70 to 80% of your trades. Then I would say that you would probably be ready to start going live. But until you get that under you, I mean, it's going to be hard to get that kind of win rate.
And you can see that right now, and also with the, if you do trade the S&P, there's a couple different theories about how to do it. One thing that they were talking about earlier with what Nathan was talking, when he did trade it, he had this on a 5-minute chart as opposed to the 15. That was one of the few, the gold and the indexes he was using on a 5-minute chart. Still the same technique with you still looking for the bounce arrow go technique on it. But we'll zoom in on this thing, and you can see there's a lot of upward pressure on this. This is all 1, 2, 3, 4, 5, 6 green, and there's these things are making some new highs. This is a little bit of this is a pullback coming right into a demand zone. So it's down arrow with an uptrend. That's certainly is a no go. And let's see what. And if you go to your expert tab on your MT4 platform, you can see some of the other trades that were alerts that were given as throughout the night in different times. So it's sort of like a log of what trades have been generated, and then you can just sort of go and take a look at some of the back ones. Take a look. I hear earlier in the morning there was a U.S. CAD trade. It was a sell. I can take a look at that one. And I like going just paging through while things are kind of slow, just to go and page through and just see what trades are, especially like looking at this time the London pairs, the British pairs, and the Europe pair, because right now we're at the London Europe session, about to cross over with the U.S. session. So it doesn't hurt to just go and scroll through and just see what pairs may be. And I'll just come over here and.
So, Al, we got a comment in the chat. Maybe we could go take a quick look. But about 2 hours ago, Ron took a sell on Euro GBP.
Euro GBP.
Yeah, looks like a good trade. I scaled back a little bit. It looks like a strong downtrend. A nice room to the bottom there in the green. It looks like a good trade.
Let's see here. We have strong downtrend. Only two green folders, or two green zones. 1, 2, 3, 4, 5 red. Let's move it back up again a little bit. And we're going to zoom in, take a look at it a little bit closer. Yeah, it does look like a good trade. Looks like it's in a little bit of a pullback mode right at the moment.
That's fine, right?
We had the we had to see what time was it. 1, 2, 3 is British, Euro British. Let's see here. Euro British. So that was somewhere around 88.76. Let's just take a look. We'll put the. I've got a little objects list where I just have my horizontal line, so I can just go for an open trade. I have one color, and it looks like that was at what did we say it was? Euro British. It looks like sell at 88.76. I'll go 0.8876 on this one. That should give us pretty. Yep, that's right. Here's where the sell was. Our target would be 20 pips below that, with that'd be 0.8856. If my math is accurate, there would be the target, and a stop would be, I would have at 88.96. What that'd be? Nope, that'd be wrong. 89.06. 89.16. 89.16, I think it would be. There's the stop. So here's the entry. Here would be the target. Here would be the stop. And we have a nice down arrow with a strong down, with a lot of downward pressure. Now this is a pullback retracement. It did cross back over to the moving average. I think this was a fair trade to take from what I can see right at the offhand. But that's why we give 40 pip stops. So right now, nice thing I like about this, you have this whole zone that if it breaks through that zone, it can come back to this whole black area and have another zone up top here. And your stop is inside of that. So it would have to take out this area, have to take out all this black zone, which was part of where the overnight, they would have to break the overnight high, because here's our money zone. And right now the high of our money zone was a few hours ago, which was right over here at this is the high of where the money zone was, which was at a price of that's right, sitting there right at 88.96. That's only about 20 pips above where your entry was. So right now you basically have pretty close to a 20 pip risk, 20 pip target, and I think you're still in a good shape with that trade.
So here, Al, just one little thing. We've got a green zone that just popped up right under price. It's a brand new one.
Yeah, that kind of causes a little bit of a problem. The problem with that is that we now have this candle which crossed over, generated. We have a green zone. We don't have an arrow yet.
Right.
But right now, it's pretty much sandwiched in between two zones right now. The zone range of this zone, the way I look at this, and there's a lot of different ways of trading this part. You're looking at a 14 pip zone. 14 pips from the whole zone is about 14 pips. So your risk is still relatively small. And if it were to go and break out of the top, it would have to break out of this zone right here. If this thing goes up and breaks out of, it starts making new highs with the money zone, which is pretty much right in this area, that this is the high of the money zone. If it starts making new highs, then you may want to think about maybe taking an early exit out. But right now, I think I'd just be okay. The fact it is such a strong down move, I think I'd be okay with just hanging on to a little bit longer. I wouldn't worry too much about it. Like I said, it's got to get through this whole zone first before it's going to be able to come up and even start to begin challenging your stop. And you can see, like up here, you have one hit here. You have a little bit lower high. You have a higher low. It's sort of actually making its own little wedge right in this area. So here's the next to the overnight high was right here. And you have a lower high right here. And you can see what's happening is coming up and it's retesting this trend line. We have here's the overnight low. We have pretty much of a flat bottom, pretty much right where our entry was. So once it can break, right now I would look at it's going to probably be bouncing back and forth inside here until it breaks up one way or the other. If it breaks up to the upside, I wouldn't worry too much. I would look at this being a trap up here where we have a flat line. Here's the high of the overnight high, but it has the downward pressure. So a lot of times you may see a little bit of a head fake where it breaks through the trend line, comes up here, finds some sellers, and then drives it back down, then finally breaks through and comes down, hits your target. I would not be too worried about this one right yet, even though there is a zone down here.
Yeah, the trend's still really strong to the downside. Now, we got a question in the chat or a comment, and it says that the Euro GBP, M5 and M1, well, there's green support zones in there. And my answer to that is, what are we trading? Are we trading the 15-minute move, or are we trading the 5 and the 1 minute move? Because the potential support and resistance at different time frames is going to be different.
Absolutely.
So if you're trading the 5 and 1, great, awesome. Then I would take those 5 minute those green zones into consideration. But if we're looking at the overall trend on the 15-minute, that's very strong to the downside, then that 1 minute, 5 minute green zone that showed up, I'm not putting a lot of weight on it.
Well, the other thing too is, let's say, as everybody's able to trade these pairs with what you determine to be beneficial to you, the strategy is that we trade the forex pairs on the 15-minute especially for this type of day trading that we're doing right now. The strategy is that the forex pairs are traded on the 15-minute chart, and the only thing that's traded on the anything lower than 15-minute would be the gold and the indexes because of its volatility. But I would, if you want to stick with the strategy, you pretty much should stick with the time zones that we know have been proven to be the most effective time zones for the risk and reward that we're looking at.
So we got another comment in here. It says Euro AUD 1 hour clean bag entry with strategy 2. For the sake of this call and the way that we're gonna move forward with this, at least for the time being, is we're gonna stick to the strategy number 1 with the 15-minute time frame, and we're not gonna deviate from that, at least for the time being, right, Al?
Yeah. So yeah, that's it. I mean, we can look at some of these other things to maybe show some comparisons,
Yes.
but we're not going to be teaching that because we haven't proven it. I haven't proven it. I do know that what we're doing has worked in the past. No guarantees of future performance, but we'll pretty much stick with the things that we know that have been tested, time tested, and
that we also have a volume of trades in, right?
yeah, exactly.
Like we know strategy 1, bag 1, we know it. But if we're going to start hop into strategy 2, 3, 4, 5, we would do it a disservice because I didn't take 100 of those demo trades, right? I don't have a knowledge of system performance, and that would be doing a disservice to everyone. So we got another question here. US CAD, you still took the trade even with no bounce prior to the latest buy. So
US CAD.
yeah, let's go see a US CAD one more time, Al.
Okay, let me see if we can find that here. Let me make this one a little bit smaller, US CAD.
Oh, my charts are all messed up.
Well, I mean, we really did. I mean, with the US CAD, we actually did it. Here it came out down, bounced, arrow, go off this
you
one.
got to bounce.
That was an earlier one, but so actually what's happening right now, you had a bounce, had a pullback. We had a higher low here. So we have a little bit of a trend. If we draw a trend line, we can draw a trend line from, we have a low here, a higher low. So here's a low, here's a higher low, here's an even higher low. So we have a nice little trend. Now I like this one a little bit better. I like starting this one just a little bit better. I like it over here just a little bit better. And we have a higher low, and we had a reversal. So we had the bounce arrow to go, and then we came back down, retested, and gave us another arrow. So, and the fact that this thing retested with a higher low followed by another arrow, that tells me that this thing that gave me a fair amount of confidence that this thing was going to come up and probably hit my target. I'm only going to go for 20 pips. If it comes up, and if it comes up close to within, if it comes up and struggles to close me out with a profit, I'll just close myself out with this trade. Because if I look over here, you'll see that here's a nice little downtrend. Here's another trend line. We had the bounce. There's an arrow to go down. We had the bounce. We had an up arrow. Came up a little higher, a lower high. So here's an anchor. Here's a hit. Here's a hit. Here's a hit rejected. Broke through. Up arrow. That's off this bounce. Came back down. Retested it. And now this thing could probably going to, I think, I'm not too worried about hitting my target on this one. We had a nice little trend line break. Here was a little bit of a head fake. Here was a trend line. This is from, this was over a Friday's close, Sunday night overnight range. Came back down, broke through this trend line, but it didn't go very far. Couldn't even break through this high over here. This was our head fake. This was a little bit of a, let's get people sucked in on the break of the trend line. Came in, reversed back, came back down, retested it, and now it's going to go broke its second time, and now it's working its way on up.
Yeah, right on. So Aussie JPY. Someone wants us to go check that one out. Yeah, I think we just got that.
Aussie JPY. Okay, it's strong. Looks like a strong down move. We may have already, it's already out of the chute on this one, but let's just see where it could come back and retrace to get an entry on it if it's in the right direction. Here's there we go. Zoom out as far as we can. We have 3 red, 3 green. So right now it's trading inside of a zone. And I believe what Nathan says, if everything's equal If you have the range, you can take the trade. If you don't have the range, don't take the trade. Is that what you understood, Matt, with that?
Yeah, to the best of
So
my understanding around
so
that.
basically we have equal zones. So let's measure the range between this green to the red. And we have 24 pips. To me, that would not be enough range for my liking, because it'd be hard to get the trade in the trade. Even like with this one, you see where the arrow is. I would not take this trade. Equal zones, which means it's range bound. We had the entry was, let's see where the entry was, the sell at 80, 80.15. It's called 80.16. So put our objects on, open trade, edit. There you go, 80.159. So here was the entry, and we're going to do 20 pip target. And so that's going to be 79.95 target. 79.95. If I have that right.
Oh, Nate says that there must be 50 range for equal zones. I must have missed that.
Is that what it is? 50 pip range?
Well, that's what someone's mentioning in the chat.
Okay.
So
I was going to say that. I was going to say that, but I wasn't confirmed about that. So thank you for confirming that, because that was what my thoughts were, but I didn't want to say it because I didn't know for sure.
Right, and that's 3 people that have said it's 50 pips range for equal zones. So that's good. I like that.
3 people said it, must be true.
Well, I would say so as well.
80 point. Let me see. Where's that? There's okay. So that's 15 pip target right there, and so that would, we still need 5 more pips. So I just didn't see where the line was. I thought I was right, but I didn't. So the target would be at 79.95. So we're going to scroll up, and then the stop would be this one. It would be 80, 55, 56, 80.56. That would be the target. Let's see if we can scrunch this down here a little bit. Target's way up. Stop would be way up there. That doesn't look right. I think I missed something. 80.55, call it. Stop. 80.55. That's better. There we go.
That's really true. Brian made a really good point. So depending on your broker, and the zones may appear differently. So just if I use NVFX, or if I use another broker and you used Hugo, we could have different zones. Just my guidance on that is trade what you have on your screen.
Yeah, I would agree. Just make sure that your indicator is loaded correctly. Make sure that you have. Here's a CAD Swiss.
We got lots. We got 5 alerts.
I see 2. I see 3.
Oh.
More? There's a CAD Swiss, a CAD Yen,
Aussie CAD.
I'm seeing a correlation with the CAD pair this morning.
Yes, I am. I like that.
So
right.
Why don't you take the CAD Yen? Eva, why don't you take the Aussie CAD, and I'll take the CAD Swiss, and we'll take a look and see if there's anything that we need to be jumping on here.
Yeah, for sure. So you said, sorry, you wanted me to take what? The
CAD
Aussie
Yen.
CAD Yen?
Take CAD Yen. Eva, you take Aussie CAD.
All right, got it.
And I'll take CAD Swiss.
See if we got something we can play with today.
And CAD Swiss. That's going to be over here. CAD Swiss at 69.66. And we'll zoom out. Looks like we have more red than green. And we have a down arrow, so that's good. So this is a possibility. We'll measure our distance to our zone. And we have Oh, we've got 18 pips to the zone.
Aussie CAD's a no-go.
Okay.
Yeah, CAD again. We've got 4 green zones, we got 2 red zones, and the arrow's down. So I'm not pulling the trigger on that. It looks like a big consolidation where it's at right now. So
this one is right on the cusp that from what I'm seeing so far. So I'm going to go with the object. I'm going to put my zones in here. So the open trade was on the, let's see, the open trade was on the CAD Swiss to sell at 69.66. So I'm going to go with 0.6966. There's that. Move this over so we can see what we're doing. And we have a target. 0.6926. See 46, 46, 0.296946. See if that works better. There we go. That's better. A little bit shy on the, we're in the zone. We're already a couple pips into the zone. And the stop would be 0.69. Actually 0.7006. 0.7006. I believe that's right. So there's a 40 pip stop. It's on the other side of this zone. We're having a pullback right now. So right now it's in a pullback, and it would actually give you a better entry. You'd probably give you an entry enough to be able to get your 20 pips. But this one is subjective. In my mind, this one's subjective. What I don't like is I don't like this big wick on the bottom of this down arrow. And which tells me this thing could be coming down. This could be forming another pivot low. If we have another pivot, I would have to say with this one, I would not take the trade. It's very close. You have about 18 pips to the green zone. You have a pullback. You have a pullback right now. It's pulled back over 3 pips. Would probably be enough to get you into the target zone for the 20 pips. But I'd be looking at, you have a low. Here's a high. Here's a higher low. We have an anchor. Here's a hit. If it comes back down to the trend line and breaks the trend line and gets you in, then I would say you could maybe go for, I wouldn't maybe push it for the full 20 pips. I would be taking maybe take a little bit less, but I would have to see it break this bottom trend line before I would take it short. It would have to get a close below the money zone where the overnight money zone low is before I would take it short. This one could be subjective. This one could go either way very easily. But right now, I would pass on this one.
Al, could we just take a quick look at a lower time frame to see what it's doing behind the scenes?
Behind the scenes, okay.
Yeah.
Do that.
So
is it 5 minutes? Here's where we had the bounce arrow go, and when I'm looking at this one is where this arrow was. If you took this trade and you got to where the bounce was, you'd be up 11. You'd be 11 pips. Now you do have a little bit of a trend line coming down. So from a 5 minutes on a 5 minute chart, you have a little bit of a trend here. Here's your anchor. Here's a hit. Here's a hit. Now we just broke this right here. So we have here's our wedge. It broke the wedge, but you do have a moving average sitting right up here. This could be a little bit of a trap to get people going long on it, get everybody sucked in to go long. They put their stops down here, they get everybody in, they come down, take your stops, and keep it on going. So that would be how I would probably read that as a possibility. I would not take it long, but I would not take it short yet either. Right now, I'm just looking that this is a basically what it's doing is making a channel.
Here, Al. I've got a little thing. So someone mentioned maybe to show a little bit of how wedges could work with it. Maybe we could do that at a later time in the session, or.
Yeah, we still teach the wedge theories in this room. So
Yeah,
right now I'm looking at that being a channel. There's a little bit of a breach of the channel, but you can see it didn't take it more. It probably didn't even go 2 pips into that. This channel probably isn't even 2 pips wide. Right now I'm looking at, it's about 2 pips wide, pretty much. So again, I said this right now for me, this is still a no-go. So we just had 3 alerts, and we decided not to take any of those for a variety of reasons. But we'll keep an eye on this one. And let me put this. Let's see. This one is the. Let's compare this one. This was the CAD Swiss.
Yeah, CAD Swiss. I can show a quick thing about the wedge that I decided to draw on the CAD Swiss.
Okay, go ahead. I'll go ahead and I'll stop sharing. You can take a chart.
Yeah. Let's take a quick look together here. So here, what I did is we had the CAD Swiss. I went to a high, tried to make a little trend line here. I like this one because I had pretty much 3 rejections of that trend line. That's pretty close for the sake of that. And then I had that bottom trend line that Al drew. So I sat there. And then I put a stick here. And okay, we'll put a stick. Now we're just going to wait for the potential breakout, right? If it breaks out here, it has a 75% chance to go the length of that stick. So it could end up at 69.45, depending on where it breaks out. But that's just if it breaks out the bottom. And putting wedges and adding this kind of additional confirmation, it's something that needs to be demo traded first. If you haven't traded just the basic strategy for bags, so strategy 1, and you're brand new to this, I would totally stick with strategy 1. Master that first. Put the foundation in before you start adding to the foundation. This would be adding additional things to it, because if we were to take this trade short for when we had the alert, I forget the exact time, but the stop loss with strategy 1 is up here, somewhere up here, right? And then your take profit is 20 pips. So I just want to show you what you could potentially do. Here, you got 22 pips. So instead of having potentially a 40 pip stop loss and calculating your position size on that, maybe you could have a 20 pip stop loss, right? And now you're a 1-to-1 risk to reward ratio. So it's just something that a person can do in the future when they get more comfortable with strategy 1. Al, does that make sense?
Yeah. Yep. But I said it's one of the things, as you spend time in these different sessions that we have with either with us or Dante, and you start getting more familiar with the platform and how the platform works and how to start reading the charts, and then you can start getting, and as you become more and more knowledgeable about the technical analysis, and things will start making more sense to you. You'll start seeing these different patterns. When you first look at a chart, when you first get into trading, you start looking at a chart, all you do is you're just seeing a bunch of candlesticks or line charts or whatever chart you're looking at, and you really don't, all you see is a bunch of candles, and you don't really understand the patterns. But as you start learning how to read the charts, you start being able to equate what the pattern is to what the prices are doing, and then things will start making more sense to you. But it's not something that's going to happen overnight. You have to train your brain and your eyes to be able to see, and eventually you'll say, oh, you'll be looking for a wedge, and you'll say, well, there's a wedge. And at first it may be what you think is a wedge, maybe not be, or maybe it is. And but eventually you'll start seeing it very clearly, and it'll just be, your eyes will just go right to it. But that's something you have to train. You have to train your brain and your eyes to be able to see it. And you see, you're not born with that ability. It's just something that you have to learn. It's something that's learned, taught. And the biggest thing is to understand that with trading, you're trying to program your brain to see certain patterns. And one thing I want to caution everybody, we talk about demo trading, and I'm a strong advocate of demo trading, but there is a point in trading demo that you have to be very, very careful of, is that when you have real money and real skin in the game, you're going to be a little bit less, you're going to be a little bit more cautious to say, well, let's just see what happens if we do this, let's just see what happens. With demo trading, oftentimes as you're trying to explore the platform, as you're trying to explore the ranges of what works and what doesn't, you'll say, let me see what happens if I do this, and you take the trade. Well, every time you take a trade of let me see what happens, you're actually really programming your brain to say, if this works, this is a good thing. If it doesn't work, it's not a good thing. But you could be programming your brain to something that works once or twice, but it still it's like you. One of the bad things about trading is if you get lucky too often and just lucky, as opposed to being disciplined and very meticulous about what you're doing. Because every time you take a trade, you're telling your brain to see what's going to happen, and that your brain records it. And a lot of the trading that you'll find out over time, you're going to be taking trades and you go, why did I take that trade? And then you start thinking that, well, because I programmed my brain to take it and it seemed perfectly normal to me, but you're getting it programmed beyond the realm of what the parameters and proven parameters are. So I just want to caution you about that. Trading demo is good because you're learning. The demo is good to learn how to use a platform. The demo is good to learn how to see how a program works, how when it generates the alert, what's it actually telling you. But there's a point where when you don't stay in the demo too long, find out how the platform works, find out how the EA works, and then take as small a position as you can and trade it like it's $1 million, because that way you'll program your brain to say, this fits the parameters, I'll take the trade. This doesn't fit the parameters, I won't take the trade. And have it be very cut and dry. Trade like a robot. You want to be trading just like the robot that you're using.
All right. So David had a great question. He said, by decreasing your risk, you can increase your position size in the calculations. Absolutely. And that's where you're going to be able to make potentially significantly more money. But that is not something to be done if you don't first have the foundation set and have a volume of trades and know what your win rate is. Please understand that, first off, my win rate's not going to be exactly the same as Al's win rate, or it's not going to be the same as Jackie's win rate, or it's not going to be the same as your win rate, because we all have different levels of experience and we trade a little bit differently, even though the system is as simple as it can get. There's no system out there that I've found that is as simple as arrow, where you got a zone, a bounce, and an arrow in that direction with a little bit of criteria. It's as simple as it gets, guys. But you need to have that volume of trades and observation to understand what's going on.
And we had just an alert for a Euro US sell. Well, I can look at it as I zoom out and see how many different zones. We see lots of green, very few red. We have a down arrow. I can look at it right now and say this is a no-go. You don't take this trade.
Yeah.
And just so you guys know, I am working on the position size calculator, getting it up to date. So hopefully within the next 48 hours, I'll have that up for you guys.
Yeah. Say, Brian, just to let you know, I went through that, and there's some pairs that we trade on a regular basis that are not in the calculator. I think I found about 2 or 3 of them there.
Well, I'm going to do all 30.
Okay, good.
Perfect.
Yeah.
Perfect.
That's what I'm working on. So
That's awesome.
And in fact, speaking of the position size calculator, let me see if, can you see the calculator now?
No, I see my screen. I can stop sharing.
Oh,
Here.
So you're still sharing. Okay, let me.
Yeah.
And I have to run, guys. I got class here in about 15, 20 minutes.
All right,
I just want to make sure y'all trade well. And have a great day.
We'll talk to you later on, okay?
Absolutely. I'll be around. School will be short today.
All right, my friend. You take care.
See you guys.
Okay, I'm back to sharing my chart now. Now, my question to Eva or Matt is the calculator. Are you looking at the calculator right now? You are. Okay. What I did over the weekend is I set all 30 pairs that we trade. I went through this calculator and I figured out what my account size was. So let's just say, for example, 1,000. And I'm going to be looking at a standard 40 pip stop loss. And I'd be looking at a standard 2% risk. So on $1,000, I'll risk $20 on any one trade. And you'll see that right now, I've got this set for the US yen. And the US actually it's not, this one, let me just warn everybody with this calculator. If you have Microsoft Excel 365, you'll be able to, when Brian gets all done with his calculator and gets it refreshed for everybody to have access to, there'll be a drop-down arrow, which you'll drop down the arrow, the pairs will drop down, you pick out which pair, it automatically fills this in. And I do have that on one of my computers. This particular computer, I only have the older version of Microsoft Excel, so I have to put these in manually. So, for example, like we were looking at the Euro US. So the Euro US, I'll just go and put the Euro US in. And we see that over here, the Euro US is $10 for a standard pip size that's $10 standard per pip. So I put the $10 in here, and that calculates what your potential loss size is. As you look down the list here, you'll see that, for example, the Aussie New Zealand, okay, if you're using a $10 per pip with a 40 pip stop, this is what your lot size is going to be. Now, if I change this pip value, like let's say we change and we're looking at the Aussie New Zealand pair, let's say the Aussie New Zealand pair comes up and shows us a trade. Well, if I put the Aussie New Zealand in here, and so there'll be a drop down arrow if you're able to use the Windows 365. And if I've seen, now remember, at $10 a pip, I'm able to take a 0.05 lot size. With the Aussie New Zealand at $5.93 a pip, I can go from a 0.05 to a 0.08 lot size. So what I did over the weekend, I looked at all the pairs. I went through the calculator, and when you get the calculator, you'll be able to do the same thing. And I said this value up here in the upper corner for the amount of lot size that I can take on that pair based on a 40 pip stop based on my account size. And I'll do that each week. So that way, as my account grows, I can adjust this so that as my account grows from, say, $1,000 to, say, $100 or $1,100, now you see that now I can increase my lot size. And so I'll go through. So at the end of each week and see what that account balance is, I put the new account balances, and I go through and just check to see if I can increase the lot size, or if I have a losing week, I have to decrease the lot size to maintain the same ratio. Because that way, if you put it in this box up here, you have it set for when you take the trade that you have the proper lot size positioning. Any questions about that?
That's a good introduction to position sizing, because it's really important things. It's and I think it's overlooked often. It's
again, it's one of those. It's that one of the three legs of the stool: position sizing, your mental conditioning to be comfortable with what you're doing, keeping the emotions out of it as much as you can. That's one nice thing about having specific trades generated, having specific methodology of strategies to take those trades. It keeps the guesswork out, and either it fits the criteria or it doesn't. If it doesn't fit the criteria, and you can decide for yourself, for example, that trade that was generated earlier, what was that? It was the, what was the one that we had? We were just looking at, it was the CAD Swiss, I think is what we were looking at here. If you're looking at the CAD Swiss, I think it was CAD Swiss.
The one that you were looking
Yeah,
at?
it was one I was looking at. It was a CAD Swiss, and we said, okay, remember we said that the 20 pips should be outside of this green zone. Well, it was in like 2 pips. Now the question is, all right, is from that alone, if you look, if this were a robot, and you can ask yourself the question, if this were a robot, would it allow you to take the trade if it's down here, if the requirement is that it has to be up here? And my answer to that would be no. The robot would say, nope, it doesn't fit this. This is a hard, fast rule. Now, you as a person have the opportunity to say, well, maybe I'll fudge on that one a little bit, or maybe I'll go for 18 pips rather than 20. That's your choice. You can do that. That's one thing about being human. You can make those choices. But if you want to trade like a robot, you would say, nope, I can't take this trade because it doesn't fit the criteria.
And one more thing, Al. So if we wanted to get our hands on this position size calculator, it's going to be posted in it's going to be held in Google Drive once compliance signs off on it, and we put all the proper disclaimers. And then everyone will be able to have access to an updated one that is compliant. And it's got the green light for everyone. So that's to come this week at some point.
It'll become whenever Brian gets it done and whenever compliance can get it vetted.
Absolutely. It's really important, right? We need to write disclaimers on there because we're talking about position sizing. We're talking about risk in a trade. It's really critical stuff. Really critical stuff. And you couldn't have said it any better, Al, where the three-legged stool, where your position size and your risk in the trade is a foundational element of your trading. I saw someone in the chat last night. I woke up and they said, I'm in huge drawdown because I took this trade. I said, you shouldn't be in huge drawdown because you should only be risking 2 to 3% of your trading account maximum per trade. And you're using a 40 pip stop loss. So that tells me that their position sizing or their understanding of their position size is not there. You can't be surprised by what's going on. We need to understand that you're not going to win 100% of the trades that you take. You're going to lose 2 or 3 out of 10. That's the reality of it. So you need to position size accordingly, understanding that you are going to take that stop loss sometimes.
Yep. You will lose trades. You will have trades that will fit all the criteria to take the trade, and you'll take the trade, and you will lose on them. This is not the markets are not it's not a given that you're going to win every trade if you follow all the rules. It is a given that you will lose some positions. It is a given that if you follow the rules, you should, and if you follow the rules with a program that has been tested over the test of time, you should win more than you lose. How you position size it will make a big difference.
For sure. And we don't want to delve too deep into position sizing because we might lose some people at some point, but it's really important. There's one point that we can't emphasize enough is that if you take 100 arrow trades, you're going to lose 20 or 30 of them. That's going to happen. So don't be shocked when you take those losses. You could actually, if you're brand new, you could take 10 losses in a row. Why? Well, it could have been a key error in your stop loss or take profit. Lord knows I've done that. You could do plenty of things, and you know what? You could take 10 losses in a row. That's why it's not wise to start a new system and go live right away. because you're going to have all this emotion built up and wrapped up into your actual trading, and you're not going to be able to observe properly and see what's going on and how Arrow actually works. You need to experience Arrow. You can't just take what someone else says and run with it and expect, if you're newer, to make the same kind of results. It's not realistic.
And the other thing is that I've known several traders that they'll say, well, I've made 90% profit. I won 90% of my trades. Well, and that's great. I'm happy for it. But he said, I'm still losing money. Well, the reason why that is, I can give you somebody who's winning 60% of the trades and they're making money versus someone who has 90% of their wins and they're losing money. And here's the reason why. If you have a 2% stop, you have $1,000 and you're risking 40 pips, you're risking $20. But what if that 40 pips, what if you're taking a position size much bigger than what the risk value is, and I'm not sure I can show it on this chart, but if you're risking 2%, well, what if you take the same trade and rather than you keep the same 2%, you're still keeping the same risk value, but let's say you end up taking you move your stop, and now that 2% risk now becomes a 20% risk. Well, now you're risking $200 because you moved your stop on a losing trade, and now you're losing $200. All you have to do is do that once, and you had a 2% risk originally. So now you win $20 90% of the time, but that one time you take the trade and you're rather risking 2%, you're risking 20% because you moved your stop. Now you have a break even. Now you risk 30% because you moved your stop again. Now you just lost $300 but you'd have to win more than 9 times to be able to make up that $300. And that's why this is so valuable, so important, is that you keep your risk factor stable. You say, this is what I'm willing to risk.
100.
And if you get stopped off, you take the hit. But knowing that if a strategy says that you're going to win 75% of the time with a 40 pip stop and you're going to make 1%, every time that happens, you make $10 every time you risk 20, but you know that you're going to be winning 60% of the time, you're going to be making money with 60% win. Hope that doesn't confuse anybody. But the bottom is that you have a risk, you have a reward, and you stick with it.
You got to stick to the...
If it takes a hit, it takes a hit. Now, there are sometimes as you learn the technical analysis, you'll learn that, well, if this thing happens, for example, if this thing breaks, if I have a stop way up here and I got into this trade short, because we were looking at that one, let's go back to the 15-minute chart on this while we're waiting for another trade. Let's go back to our 15-minute stop, 15-minute target. Say, here's our down arrow. Okay, our stop is way up here somewhere. Here's where our stop is. So what you can say is that, okay, if this thing breaks this trend line, I'm going to take this one off because this is just going to clutter the chart up here. But you can say that if this thing, you can make the case that if it breaks and starts going up to retest this, and it starts making higher highs and higher lows and starts working its way up, there's no point in waiting until it gets to your 40 pip stop to take the hit. You may just want to get out of that trade and cut your losses early because it went too far against you. The 40 pip is a area to kind of keep you out of harm's way, to let you have the wiggle room to do so. But if you start seeing it's just going to start trending against you, then just get out and maybe get a better position to go short. Wait for the next down arrow. British CAD. Here we go. Let's take a look.
Yeah, British CAD. Let's go. That's one of the 10 currency pairs.
British CAD. We're going to zoom out. Looks like it's in an uptrend, but we have a problem. Anybody can tell me what the problem is? Let me ask if, would this fit the criteria? We had a lot of green zones. So it says it's an uptrend. We have an up arrow, says to take it long. But do we have the 20 pips to the red zone? You can see we're right in the red zone. Because see, this is the area that the price was rejected before. The sellers came in right up here, drove it back down all the way down here, came back up, it's retesting. What I'm seeing right now is here's a high, here's a low, here's a little higher low. But if you draw a trend line from the overnight high, which is right here, you can see where this is a money zone. You can see the shaded area, right? We can see where it sort of changes colors. You can see that's where the high of the money zone is. Here's another high. It's got a little bit of a slope to it. So right now we still have a lower high. It's in the money. It's in the, we have a supply zone. This is where prices rejected before. It came down, was rejected, came back up, was rejected, came up. This is the third hit right here. And we know that we're in an uptrend, but we're right into the area where it was, price was rejected. So in order to get your 20 pips out of this trade, it's going to have to go through this zone. It's going to have to go through this zone. Let's draw the lines here on this one. So buy. Look at our object list. And they said buy at 174.08. So I'm going to go to my open trades. 1.7406. That's where the alert came in to go to buy. And we're going to go to our target. And so 174.06, so it'll be 174.28. Actually, 174.08 is what the number was. Let me change this. 1.7408. And we're going to go with the target. 1.7428. There's our target. And our stop would be 173.68. And that's what we're looking at. So here would be the target, here would be the stop. Now, if we were going long in these zones, we're in here, and our stop was way down here below this zone or inside this zone, that'd be a pretty safe bet. But right now, it's the target has to get through too much. There's too much rebar here to be able to get through to get to your target. Not saying it won't happen; it could very well. But for right now, this is not a trade to me.
Neither is it to me. I'm not taking a trade into that red zone, especially when those two red zones are right there. It's not happening. I mean, each to their own, right? Whatever you want to trade, you feel free to trade. Maybe you've got a different way of identifying that it's going to slice right through those zones. But for the sake of strategy one, we can't take it.
Any other questions?
The USD CAD trade earlier, I didn't get the alert because my charts weren't set up right. But you got it, didn't you, Al?
The USD CAD?
Yeah.
Yeah, I think I did. Let me see, I can scroll through my USD. Yeah, USD CAD right here it looks like it was at 12:15 this morning chart time. Maybe there may be another one here. Let's see. No, that was it. That was earlier this morning, 12:15.
That was quite early on, eh?
I think so.
Yeah, so it's outside of the time. Like if the trade's been gone for an hour or something, I would really hesitate getting into it.
There's one here at 12:15 would be 12.
Yeah, it's too long.
I'm just trying to think what I'm trying to get my conversion time, my time conversion from when
I get it messed up all the time. I get all confused.
It's a buy 127. 10. Yeah, this is the arrow right here. That was where this alert right here was. That one right here. It was at, let's see what the one was, 12:15. That was at, so 12:15. There's a difference in my chart time here. But this was the arrow. Here's the price, 127.10. 127.10. Up arrow is a buy. And this is one this one I did take this one, and you know, I wasn't paying attention to it. I just sort of let it. It's either going to take it or not. I did. Now, have I been watching this chart when it came up here and started bouncing? I would have just gotten out of it. I'm still in this trade.
That's an interesting observation from someone.
I'm still profitable. Now you can see. So you see here, what it's doing is forming a little bit of a wedge right here. We have this was respected. This one came down. Remember we said this one came. So the question earlier was, well, what about this bounce here? I said, well, but we did have the bounce arrow go here, so this would have been a trade right here to go long. It came back down, gave us another opportunity, which is actually, and you see where it actually gave you a little bit better entry on it. Just barely, just a little bit. This first entry was right up here. This one off of this arrow was back a little bit more. Now this thing comes up and can't get through that this time, I'll be out of this trade if I'm watching, assuming I'm watching it. In fact, I'm going to put I never did put my targets in here. I need to do that. I got getting ready for the.
Yeah, so I never heard that for the rules. So maybe I missed that, Brent. But you said the first arrow on UCAD was valid and the second wasn't because of the down arrow in between. But are you saying the third arrow is valid?
I haven't heard that one.
Yeah, no, I'm just trying to figure out what.
I just figured the arrows are generated. The arrows, there's either room for the targets or there isn't. Doesn't, I mean, even though if you're in the trade, you have the choice of whether or not to stay in the trade when you get an opposite arrow. Generally speaking, if you get an opposite arrow and it reverses on you, then you generally get out of the trade and wait for a better entry. In this case, if you're in this trade here, you have gotten out off of when this candle closed below the moving average, and especially if you get a down arrow, you would be out of this trade. You wouldn't have waited for the 40 pip stop. But you also see that if this price gets rejected and you get back in, so basically you would have taken a little bit of a hit here, but it would give you another chance to get back in for the target. But I do believe that that is if you have an up arrow, it comes back down, closes below the moving average, and you get red bars, you get out of the trade. There again, now it's subjective. If your stop is on the other side of this, I personally would be waiting to see if this zone here would hold. See, now we had a nice little run up, came back down. We have a little bit of a, and if you do a Fibonacci retracement on this, you'll probably see that from this move to the retrace back here, this is less than a 50% retrace. And generally, if you have less than a 50% retrace, it's going to come up and retest this and probably go a little bit higher. Let me see if I can find my retrace tool and show you what I'm talking about. We'll draw the Fibonacci from, well, let's just draw the Fibonacci from this point here to here. Actually, it came down from this move, from this move where this down arrow was, from this low to this high. This is nice little, you can see where the length of this move to here, and then you have the retracement, and it came back and it retraced right at the 50%. So in other words, this thing retraced 50% of this move. It will probably come up and retest this area. Obviously, there were some sellers that came in to help drive it back down. The buyers came back in, and now it's going up to start hitting the target. And that's one of the strategies is on a retracement is that comes back, if it comes back 50%, and your target is, this is your target 1, this is your target 2, and your stop would be, you'd move your stop all the way down to this zone plus 5 pips, minus 5 pips. So this would be where the stop would be right here. And this is still, this is target 1 right here at the, where this top of this range. But for the Fibonacci retracement, one of the rules of the Fibonacci retracement, which this does not follow that rule, is it would have to come down and close. You'd have to break this moving average first. But this does show you what the retracement of this was. And you'll see it started to get rejected again up here. And you know, and I'm okay with just taking it off. There it is. There's a close that trade out. It's having a little bit of trouble getting up through this. Now, do I think it's going to go up through? It's probably a good chance, but why am I going to? It already rejected once. I was up here just about ready to hit my target. It was rejected once, came back down, and that's where you say, "Oh crap! I should have just taken it off." If it comes up the second time, I'm just going to take it off because it's finding some sellers up in this area. And I used to go to China a lot. If you ever go to China and you ever go to the silk market in Hong Kong or in Beijing, you'll go in there. If you get there early in the morning, the vendors will be there, and you will get your best deals because you can negotiate your best deals because they have a theory that the early sale of the day is good luck. And I work on the same theory is that when I start trading, especially in the beginning of the week, I'll take a trade just to, I'll make that deal a little bit earlier. I may not make as much as I want to, but I have a positive trade. That sets the tone for the week. That sets the tone for the day. It's good luck to get that first sale of the day. Just like it's good luck to take that first profit for the day. It's good luck. And if you want to take this Fibonacci off, you just go to your object list, find out where your Fibonacci tool was. You slide this thing down till you find out where Fibonacci is. It's probably all the way at the bottom, right here. Click on it, and then you just delete it. And it goes away.
Yeah, but Mondays can also be pretty slow, right? We can expect some major consolidation before the major players start taking their positions for the week. So.
And again, you can look and see where we had a, this is from Friday. This is Friday's high and low from Friday. And you can see right now we're still in the range. If we have where Friday's high was, which was right here, and Friday's low is down here. You can see this is the money zone for Friday. And right now it's still trading inside Friday's money zone. There's a US yen. Let's take a look at that one. I love having all these alerts come in. They have lots to choose from.
Tons to choose from.
Here are our zones. Here we have 1, 2, 3, 4, 5 red. We have 1, 2, 3. So it's in a downtrend. So we want to only take down arrows. Scale, zoom in. Go back one more. Zoom in. Here's our arrow. Take our crosshairs. We said here's where the entry would have been. Here's where our target would. Do we have 20 pips? Nope. We only have 1 pip. 20 pips is all the way down here into this zone.
Oh, that's a brand new alert though, right?
Yeah, but yeah, it's a brand new alert. But you can see where we're inside of range. we are looking for down arrows, but we also looking to see that you've got a strong red zone up here. Both this red zone and the green zone were formed all the way back last week sometime. And right now on Monday, as this is Monday, it's just trading inside this range. And we were saying, even if the zones were even, if you had 3 red and 3 green, you need 50 pips in between the zones to be able to take the trade. Even if the zones were even, we still only have 16 pips in between the zones. It still would be no trade. There's just not enough room from the time you get into the trade to your target. There just isn't enough room to make it worthwhile taking the trade without having undue risk. No trade.
Makes sense to me.
Very clear cut, very, very specific rules. And as I urge everybody to go through the AP University, go through the different strategies. I think there's eight or nine strategies out now. Get familiar with them, and then start looking at and you're gonna have to listen to. I mean, I listened to those strategies 3 or 4 times before I feel like I really understand what they're talking about. To get some, because then you'll start saying, well, did he say this under that, or what was exactly the criteria? And you'll find out that even some of the things that aren't covered in the strategies, you'll find out like, well, what about this one? Well, it may not have been covered. And that's where you ask the question, and then we start and find the answer to the question if we don't always know. Because even though the strategies are there and they're very good videos, sometimes it doesn't always answer all the questions that come up as you start using those different strategies.
Yeah, there's no way to address every absolute thing that could happen on the charts in a 15-minute video. It's impossible. So there is some opportunity there. And I was talking to Nate earlier, and he said that he's going to be taking another look at some of the videos to make them more concise, add a little bit more content. So he's really on this, guys. He's really done something special.
And so we go and we look now. So we can just start looking through some of these others. You can see right now. I can see that. Let me take off some of these trend lines off so we don't confuse ourselves here. I'll go to the objects list, find out where the trend line is. Here's a trend line. Delete it. Make sure we get the rest are all the normal lines. Okay. So again, as you just scroll through these, before you get the alerts, you can just say, well, yeah, that's not going to work. So let's go to the next one. Well, let's see. We zoom in, or zoom out rather. More green than red. We were looking for down arrows. Scroll back in. There's a down arrow. Do we have the range? Nope. We don't have 20 pips there. In fact, this whole range is we have from the bottom of the red to the top of the green, we have 14 pips. If we get an arrow right now, no trade. Yeah, let's go to the next one. British yen. Zoom out. More green than red. We're looking for down arrows. Well, hey, there's a down arrow. Let's take a look at that. Yeah. Would we have 20 pips? We would have had from this if we had looked at this trade right here. If we had looked at this, here's the down arrow. Here's the entry right here. Would have been. Now this green zone wasn't here at the time. Did you have a trade? Yeah, you could have. So if you could have you were looking for down arrows. We're in a downtrend. Let's zoom back out again. See, lots of green. So what I'm going to do is, as I go through this a lot of times, what I'll do is I'll go and say, there's an arrow. So we know we're in a downtrend. I'm going to put this arrow right up here. So the next time I look at this chart, I say, I know I'm in a downtrend and when this zone goes away and there's an arrow still sitting here, I know that there was a zone sitting here somewhere. So that gives me an idea. Say, okay, now maybe the trend has reversed because because if it can take out this zone, well, maybe we may be starting to get it more. Well, actually, if it takes out this zone right now, then I know that the uptrend is still intact. If it comes down and takes out this zone, then I may, and actually probably should do is, I'll just leave it up there like that. But I like to mark and see which direction is the zone, is it going with these little arrows. And that way it just gives me a little bit of an idea of what to be, it kind of speeds up the process a little bit. But we have we know it's a down, let me just do this again here. Actually, this is not down, we want an up down. I thought that something was backwards. Let me try this again. Let me refresh the screen again. Just, if you go and you, when I got rid of my arrow, I got rid of the zone as well. So what you want to do, you just want to reload the template here. And this kind of goes back a little bit when we reloaded the new version. What I just did, I just loaded up on one chart with the template. And I have this, my Arrow 3 version template. So that way, all I have to do is just reload the template again if I took the zone away. And you can, once you get it on one chart, the template, well, you can just reload, take each chart and just reload the new template onto each chart. It'll save you a lot of time that way. If that's confusing, let me know. I'll go over that in more detail. So we're looking at.
Hey, Al, did you address the down arrow on USD CAD? Like, there's a question: is it a bank induction move or something like that?
On the US, I'm not. I understand what you're talking about. I don't know if I'm qualified enough to say that it is, because this bank induction thing is kind of new to me as well.
Exactly. So
but based on what my understanding, let's go back to that a little bit. It was a US CAD is what we were talking about.
Yeah, because I'm not going to talk about bank induction. That's a whole different strategy. And for the sake and simplicity and integrity of this room itself, at least for the 7:30 to 9 portion, I think we're going to stick strictly to strategy 1. So different time frames, different, like I've had questions about 4-hour charts and long-term outsets, but we're going to stick to 15-minute, guys. We need to put the foundation in first before we start adding a whole bunch of stuff. Yeah. Like, Al, would you say that it would be probably not the wisest thing if a person hasn't put the foundation in with a couple 10, 20, 30, 40 demo trades with strategy 1, and they start talking about bank induction and indices and crypto, and I mean, it just makes things so much more complicated than it has to be.
Yeah. Here's what I do know based on my personal experience is that when I get a move down, and usually the stronger the move down, now look at the angle of this trend right here. That's fairly steep as opposed to, say, this move here. As you go, this was a little bit not quite as steep. Let me just draw some trend lines here, and I'll show you what I'm talking about. Here's a trend right here. And it's about a 45-degree angle. If I move this same trend line over to this area, you can see this move right here is a lot steeper. To my knowledge of trading, which I know is that when I get a long trend down and it hits an area, in this case, it hit this zone, and it bounces off of that. And when it comes back down and retests the zone and I get a higher low, whether if you want to call that a bank induction move, I don't know. I'm not sure the full definition of that. From what I understand, a bank induction move is, I would say that probably is, it may be, I would not say it because I don't understand it. I do know that if you have a strong move down and it bounces back up 50, 60, 70%, comes back down and makes a higher low and then bounces again, I do know that that is forming a hit off of a trend line. And off that trend line, and now I have at the long move down, that's the anchor. The retrace comes back, that's the hit. Comes back up, makes a higher move here. If it comes back down, retest it, it's going to have to break through this before I'm going to expect it to go further. Oftentimes that third hit. Now here, if you see, here's this little part right here. Strong move down, came back out, came out of the zone, came up, probably just a little bit, came back down, made a higher low. If I use this trend line right here and snap at that, here's the anchor, higher low, higher low, higher low. I do know that right now that trend line is valid. It's a valid trend line. It's got 3 hits. It's bounced off of this trend line 3 times. Anchor, hit, a hit. This trend line has some validity to it, that the price has, there's some buyers that keep coming in around this area. When it comes back down, I'd be more apt to take a long down here. And if it comes down, bounces, gives me another arrow, and I've got more green zones, I'll be more apt to take it if I have the 20 pips to the target. Is that called a bank induction move? I couldn't say. Maybe another week or two, maybe I will be able to say, but right now I don't understand. I was first introduced to the bank induction move just a few weeks ago, and I haven't really looked at it that closely to be able to really comment on that.
No, because we were just focused on strategy 1, right, Al?
Exactly.
We're getting our volume in so that we can say, you know what, I win 80% of the trades I take. So that's like myself, I demo traded for the last 2 months with strategy number 1. 2 months, guys. And I've seen some people that come in a couple of days and think they're going to go and trade live money on a new system that they haven't traded before, no matter how simple it is.
I look at this one right now. I'm just scrolling through. 1, 2, 3 zones. 1, 2, 3 zones. Do I have 50 pips in between here? Probably not. I'll measure it out from here to here. I have 15 pips, not a trade. Now, if I go in a little bit further, now I have 1, 2, 3 zones red on the top, 1, 2, 3, 4 green. We're in a downtrend, so I'm going to go and put an arrow over here on this chart. It's so we have an up arrow, more green than red. We're in an uptrend. I'm only looking for up arrows, up arrows. If this zone right here goes away, I'll know that there was a zone here, which means the trend may be starting to change, because now it probably formed, it took away one of my green zones. Now I have 1, 2, 3, 1, 2, 3. Now I'm back into that 50 pip range. But right now we're in an uptrend. We're looking for up arrows only. Scale in. But even if I get an up arrow right now this thing looks like it could possibly come through. If it can break this zone away, well, then things are going to maybe be changing. But for right now, that's where we are. No trade. Not even if it trade. Now, if it breaks this green zone, you only have a couple pips to the next zone. You still wouldn't have a trade. Let's go to the next chart. Zoom in, or zoom out, rather, I guess I should say. We have, you can keep on zooming until this thing sort of shades away. If you can still see these little blue areas up here, there's still another zone that you could probably, another level you could be taking. That's as far as zoomed out as it'll go. 1, 2, 3, 1. Down move. There's a British Swiss. Let's take a look at the British Swiss.
Yeah, the pound Swiss has been good lately, Al.
Yeah, well, this is the time of the day for it. Pound Swiss. Here we go. Open it up. And we don't know how many zones we have yet, so I'm going to zoom out. Lots of green. Going to put it at red, put an up arrow in there. So we're going to go with the up arrow. I'm going to put it right here by the zone. Zoom out. Or zoom in, I should say. And I'm looking to see that we're in uptrend, up arrow. That's a good thing. But, so we have a problem. We have a red zone right by the arrow, and we only have 3 pips till we get there. Not a trade. Done. I'll move my little, this kind of marks the money zone. This is the overnight session. Here's where the money zone hits. And right now, right now it's still struggling to get past the high of when the money zone started. It would have to break, if it can break that, if we can get an up arrow breaking through this zone, that would be our target. Then we may have a trade. We get another up arrow. Here's the up arrow. We have 31 pips here. Now the question is there enough push to be able to break out this zone, break out the overnight high? Let's mark that. Here's where this is where the zone is. This is the overnight. This is the top of the money zone right here. If it can break the top of the money zone, we might be able to have a shot. Right now, we have to watch that. There's a red zone, can't do it. The stronger red zone is up here. You can see where this thing started way over here. This is the origin where this down move is. This red zone was created off the origin of this down move. Pretty sharp down move. Look at the angle of that. You can see that the angle of this is probably steeper than the angle of this. So a lot of times you get this slow, gradual meandering up, comes up, and then it's more likely to shoot up. You have like a little bit of a basing, and it shoots up, retest this zone. But right now, not a trade. Let me go on to the next one. Where were we? We're somewhere on here. Zoom in. Got one more I can do. You see how that sort of shades out when I get to the end of it. 1, 2, 3, 4, 5, 6. 6 red. 1, 2, 3 green. Looks like it's in a downtrend. This is all just very mechanical. Downtrend, we need a down arrow. I'm going to put the down arrow right here by this zone. Go zoom in. If I have an arrow and this zone's not here, I know that things are starting to change. But we want a down arrow. This was a down arrow right here. We didn't take this trade. We weren't looking at it at this time. But if we look at this arrow right here, here's the entry. Measure it out. Down arrow, 20 pip target. Well, I'm only seeing 7 pips to the downside on this one. Not enough room to the green zone. 8 pips. So right now, this thing's only trading in about 16 pip range. No trade to me. Go to the next one. And we scale in, or zoom out, I should say. 1, 2, 3, 4, 5 red, 2 green. Downtrend. Down arrow. Put it right by the zone. Zoom in. Downtrend, down arrow. Let's measure it. Here's the last arrow. This is where the close was. Here's where the open of it would have been. There's a zone. Stop zone would have been way up here. There's 40 pip stop. This is the one we looked at actually earlier. There's our 20 pip target. This one looks like it could be a trade. Actually, we're right at the price where the arrow was. This is the one that we said that we had down arrow. Remember, it formed a green zone right below here? That zone's not there anymore. You could actually probably take this. If you did take this trade short before the green zone, this is one that we had, I believe it formed a green zone right down below here. And I said I wasn't willing to get out of it yet because we were in a downtrend. We had a downslope. See how, now this was not happenstance. You see, where did I put this, where did I draw this? Here's where I drew this trend. This was the end of my trend right here. And look where it came up. It came right up and tagged that trend line. And I said, if it breaks the trend line, we might get a little bit of a head fake up here. And I said, I don't want to take it short until it comes back down and breaks through here. So right now, this trade, if you got into this trade, it's still a valid trade. You had plenty of room for your stop. It pulled back against you. You didn't get out of the trade yet because, and now you're looking to see, and here's your target. Your target's right here. Now, am I going to jump into this trade? If I get another arrow, if we get another arrow alert to go short, yeah, we'd probably have we'd have room to the green zone to take that trade. Euro British, see what that looks like over long term. Yeah, I'd say that one has possibility to the downside. Certainly to the 88.65 area, which is where do we have our target on this? And it's 9 o'clock. We're at the end of our session.
That went by pretty quick, didn't it?
It sure did.
Yeah, that was super fast.
Do we have any questions? So we're going to be wrapping up here. I don't know if there's anybody coming in behind us or not today at 9 o'clock.
No, there's not. There's no one.
Oh, there's just one question about how to resize the arrows.
Oh, resizing? Yeah, we can do that. So we go have the arrow. Just what I like to do is I just right click, find my objects list. Look over here and see where I can find my arrow. Let's scroll down to I find an arrow here. Probably at the very bottom here. Here's my arrow. Click on that. Go to edit. And you'll see as you can change the color. And this is where you resize it. So you can go real big.
I think it means the size of the arrow itself, not the lines that form the arrow. Like
well, this will size the arrow.
Oh, does it?
Yeah.
Okay.
If I go in the big, look at the size of this right now. Now I go okay. Boom, there it is. It's bigger.
Oh, cool. Okay.
It's the line just shows you how big it's going to be. With the arrows and objects like that, a lot of times the thicker the line, the bigger the object. The thinner the line, the smaller the object. As opposed to like it being a line. Now, if it's a line, then it would be the thickness of the line. But that's how you resize the arrow. Hopefully that answers your question. Monday mornings are generally fairly quiet. Tuesdays, Wednesdays, and Thursdays are generally your better days. We have a lot of your institutions are just getting their positions set for the week. And so Monday there's a little bit of there's some trades, but the better days oftentimes are more volatile days, and the busier days are going to be like Tuesday, Wednesday, Thursday. Fridays are usually institutions are taking profits, people are taking profits. Again, be aware that on Wednesdays a few red folders on Wednesday. I'd probably stay away from some of the U.S. pairs this week still. If a U.S. trade comes up and it looks good if it fits the criteria on these arrow alerts, if it fits the criteria, I'll take the trade, whether it's a U.S. pair or not. As long as it fits the criteria, then I'll probably take it, unless there's some other underlying reason that I find out that would make it worthwhile not to. So with that, I thank everybody for coming in this morning. I can't tell you how happy I am to see such a wonderful group of enthusiastic traders. Hopefully you learned something today. If you have questions, think about questions you may want to ask. Please don't be afraid to ask questions. We're always, as Daisy Duncan says, I'm always a student. I'm always learning. I learn things from you folks. Hopefully you're learning something from us. Stay safe, stay green, and we'll see you tomorrow, same time, 7:30. Talk to you later.
All right. Take care, everyone. Bye.
Ciao.